Mind your business. You was always in my phone. Go eat your food.
What's going on, everybody? This is Travis Witherspoon. This is another episode of Trade with Travis. Hey, Monday edition. Hopefully, everybody's doing very well. It is 8:32 as I have it right now, and that means that the forex market is open. So we'll go ahead and take a look at some forex pairs while we end up going through and taking a look at everything else. It was a great morning based off of the trades that we ended up placing in on Thursday and on Friday. So if you was a part of the Trade with Travis sessions last Thursday and last Friday, quite frankly, you should have hit your profit targets on every one of your pairs, including DAX, in which I got out early on the last one. So I'm kind of upset that I got out early on the last one, but it was a five-figure morning. And hopefully we can be able to keep that momentum as this month is starting to close out. We are in the third of fourth week. So let me make sure I end up saying that right. We are in the fourth, I'm sorry, we're in the fourth week of the month. Remember, the fourth week of the month is not necessarily a trader's week, it's more of a recovery week, or basically defining what the move is going to end up being. So we're going to end up talking about that as well. So let me go ahead and get started. Not a CTA, so I'm not going to tell you whether to buy or to sell. What I'm going to do is teach you education, and from the education, you can be able to make your own informed decision. Understand that forex trading, or trading in general, involves risk. Involves risk being able to make money, also involves risk being able to lose money. So please keep that in mind and understand that past performance is not indicative of future results, which means that if you end up making money yesterday, it's not promised that you can end up making money today. So with that being said, as we go through and take a look at this economic calendar, and be able to see what's actually going on with the overall markets. What's going on, Doe John? I hope everything's going well with you. If you have a pair that you want to be able to talk about, go ahead and place it inside of the chat box. We'll go ahead and get into it. I literally just got started. So my trading day is pretty much almost over with based off of what we did on Thursday and Friday. But I would like to take a look and see if there's any other opportunities. So Monday doesn't look like there's going to end up being anything. From an economic standpoint, I mean, from a fundamental standpoint. Tuesday, we take a look at that. It is going to end up being another traders day. So the only group that's going to really be affected is Germany and the Eurozone in particular, and Great Britain. Wednesday, we take a look at that. We're going to end up having durable goods, non-defense capital goods. That's probably not going to affect the market all that much. So I guess the thing will probably end up being is they're going to end up being any type of earnings reports or any type of random news that may end up affecting the market as a whole. But this week, just like typically the last week of the month, is always one of those months, or always one of those things to be able to take a look at. Take a look at what's going on with that SPY. Absolutely, I think I still got a chart that we end up taking a look at that real quick. Matter of fact, let me go ahead and get through that first because most of my pairs that I end up talking about are pretty much over with. Especially this move on DAX is a little bit more room left all the way down to 224. We'll talk about that. Matter of fact, let me go ahead and talk about SPY because I'm pretty much done with every one of those other moves. But excited and happy that everybody could be able to make something off of that if you end up taking that trade with us based off of that move. Uh, Took a little bit to get there, but I'm glad that it did. Let's see. Let's see. Which one did I do it off of? Let's see. Which one did I do it off of? Did I do it off of this one? Yeah, I did. There we go. There we go. All right. So take a look at what's happening with SPY. We'll take a look at it from a weekly perspective. If I remember, I said that I believe that this market was going to fall down at a certain point just because of what I ended up saying from the weekly and the daily. And quite frankly, right now, it showed a king's crown. Okay, that's what I remember. It showed a king's crown formation. I expected that was going to end up falling. So essentially, what's happening right now, if you take a look at the Fibonacci's, the Fibs have already completed a second Fib. And at this particular point, now it's going to move all the way up to the 618. Because it's up to 618 on the weekly, and it's in the sell zone on the weekly, we're talking about maybe 2 to 3 months of overall downside movement. That would basically kind of be kind of formable on what we end up talking about before. Remember, October to January is typically those months where the market really starts to trend in a direction. Typically, the summer months are months where the market ends up consolidating or setting up what's going to end up being the move for the rest of the year. So the move hasn't broke the counter trend line break to the downside as of yet, but it's still above the 618, which means that I am more interested in being able to look at a sale when it comes down to this overall move. We can kind of see that move is then moved out of that has moved out of that consolidation block that we end up talking about. If you end up placing an order at 425, you should already be in on that move. Though I don't know what position that you're already in. Hopefully you're already in the move, but 420, 425 was the area where I ended up saying if you were going to short it, short it early at 425 and see where it's at. Currently, right now, the market is at, before the market actually opens up, 422. Um, there's an expectation from a Fibonacci perspective that this thing can fall all the way down to 300. Now, do I think it's going to fall all the way down to 300? I don't, but it could. Now, the better play on this one will end up being what's happening from this high volume node all the way down to this little middle open gap that I end up having shaded. Because remember, when a market ends up breaking a inner trend line, typically the market will end up gravitating toward the outer trend line toward the downside. So I think the best move will end up being, if you're going to short it, look to be able to short it all the way down to at least 395 before being able to get out on that pair. Depending on your equity management, depending on the way that you end up trading. Now, that doesn't mean that you have to take one trade and hold that trade for the whole time. Now, obviously, I don't do that. What I end up doing is picking my spots in the low volume nodes and be able to take trades based off of it. But go into the hour. Let's see what's happening from this overall movement, and then after that, I can tell you on what I would look at being able to do for the rest of this move. All right, so remember, first one that we end up talking about with this consolidation, I end up saying that I was looking at being able to break it to the downside. There goes that 425 break that we end up talking about for being able to sell. I said look at being able to get out at 422. Go figure. Now, this market is, if we take a look at it, it's probably going to end up being in consolidation again. So we had our free run area. Now we take a look at it from a 15-minute perspective. Okay, so we got our free run area from here to here. Now we're working on the next move when it comes down to this space. What I would end up doing if I was you, take a look at the consolidation block. Here's your supports. It goes your, there goes your resistances. It goes your support. I'm gonna get rid of this wick and say that's not the true support, because that's just one part where it fell down. We had these two areas where the price was basically normal. And if you look at the volume profile, the volume profile kind of matches up with that. So my next order, if I'm doing anything when it comes down to this move, we end up looking at being able to place a sale right around 421.70. If it breaks 421.70, then the next area where it could particularly fall down to will end up being to 420. So that would be the next look of where I would end up going to when it comes down to the move. The next trade that I would look at being able to pick up will end up being from 421.70 all the way down to 420 for that move. Hopefully that helps out. If you're already in a pair for buying or anything else like that, I'll stay away from a buy. Obviously, we just talked about how the market's looking at being able to fall. Type in a while, yes, if that makes sense. We end up going from there. Courage, the last sum, what's going on? Can you please take on Euro, United States dollar, and pound, United States dollar? Absolutely. Can you take a look at gold? Absolutely. We got to go through the big three, and I can be able to answer the gold question first, and then after that, I can relay it to what's happening with Euro, United States dollar, and pound, United States dollar. Just give me one quick second. How's everybody doing this morning, though? Hope everybody's doing very well. For some reason, TradingView doesn't show me how many people are actually in the actual group anymore, which is weird, but that's neither here nor there. Hope everybody's doing very well. Let's see, retry. All right. Oh, same to you. Same to you as well. Billo, what's going on, man? Everything's well. Everything's well. Getting very close to birthday, so it's super excited to be able to see my daughter. Okay, what's going on with Smart Trader? Okay, we'll do Euro United States dollar this way. I'm going to take a look at Euro United States dollar first, then, since it's that way. All right, so Euro United States dollar. If you was in a previous trade with Travis, I ended up talking about a pending sale, at parity with a stop loss of 1.0065 and a take profit of 98.65. 98.65. The reason why I ended up getting that was because you take a look at what's happening from a weekly perspective. Obviously, this market has been bearish. It's been bearish for a while. And currently right now, we are at future low prices, or very close to future low prices. Matter of fact, going all the way back to 2003, we haven't seen the market go below 90 cents when it comes down to this movement. So at this particular point, this is the first time in a while where the United States dollar has actually been stronger than the eurozone. So just keep that in mind as we take a look at this, and also be clear that because we are in a position to where it is future low prices, you're going to start seeing the law of diminishing returns, meaning that I would not look at being able to stay in this trade longer, because you just don't know where it's going to particularly go. But let's go and place in this Phillips real quick, and I go ahead and give a quick answer on what I think is going to end up happening. All right, so first field was from here to here. Completed that D extension, A to B to C to D, which is right there. Second field was from here to here. They pretty much had the same high. Okay, A, B, C, D. Third field was from right here to right here. Fourth field was from right here to right here. And currently, that's where we're at right now. So, as we take a look at what's happening with the euro and United States dollar, obviously the market is bearish. Um, I would not look at buying because market is below this, because the market is below the B, which means that it's in an R3 position. R3 positions means that means that the market is in a push zone, meaning that the market is going to end up having way more sellers than there are buyers. So there's no reason to sit up there and fight against the sellers. You might as well just go ahead and play with them when it comes down to this movement. And take a look at what's happening with the daily. The daily is in the buy zone, which means that it's kind of hard to be able to say if I'm interested in being able to get into a sale, unless you end up finding the same situation where the market kind of consolidates again, and then after that makes that break of a move. If you would have got in at 101.25, probably it may be a little bit different of a situation. But if I'm saying, I'm assuming, courage, I'm assuming that you're not in the position right now, because you didn't write that you were. So I'm assuming that you're actually looking for a position. With that being said, if you're actually looking for a position, I would say currently right now I would wait just a little bit. Um, there, this was our free run area that we just talked about last, from here to here. Um, that's that vortex space that we end up looking at, also known as a free run area. Um, from right here to right here. Currently, the market is consolidating. If you're going to end up making a trade and um, you want to make a trade and you want to be safe, here's your high volume node we're working off of right here. Ah, shoot. Come on now. Here's your high volume node that we're working off of right here. I will only look at being able to place in this pending sale, but if you want to place in a pending buy, you could, but I would say lower your risk level on the pending buy. Sale would end up being at 99.95, which is very close. Go figure. I'm sorry, 90, yeah, 99.95 will end up being my order where I would end up placing in a sale if I'm going to end up doing that. Now, if I'm being um, because once again, I'm talking about the law of diminishing returns and not knowing what's happening with this overall market, and knowing that the weekly is very close to being in the sell zone, or it's already in the sell zone. I would look at being able to place an order right there, but my stop loss will end up being above the point of control. So the point of control is right here. I would probably go just above that and place it at 1.0076. My take profit, let's see if we can be able to get some type of information. I don't think we're gonna get any information. That's the crazy part, because once again, we're hitting a future low. Um, this was our lowest position right here, and that was on July 11th. I'm sorry, July 14th. That was the support. Let's go back and see if we can get any more information. I'm going to have to go all the way back to the weekly to be able to get some more information. Okay, you got two positions. One, your take profit point of 96, 68, or go to the previous low that was in July, which is at where is it? The previous low, which was at 99.62, which matches up with, I got 98.65 as my take profit position. Uh, but I'm going based off of buying profile. I would probably scout this. I wouldn't swing trade this. But that would be the order that I would look at being able to take if I'm going to take any order. But once again, don't get fooled by all these wicks. I'm seeing that we have 1, 2, 3, 4, 5, 6, 7 different wicks of buyers trying to push this up. So if you don't feel comfortable with it, let it fully close below this overall box before being able to place in this order. Because you might end up getting placed into the order, and then an hour after that may end up popping back up and then taking you out of it. But from a 15-minute, I would let it fully close and then see if it's going to retest back inside. If it retests back inside of the channel, or back inside of the consolidation, get out very quickly. If it doesn't, then keep on riding it. But there you go. Hopefully that makes some sense. So I'm going to say that again. 99.95 we end up. I mean 99. I see it's going up. I would say 99.93 we end up being my order for selling. Stop loss will end up being above the point of control at 1.0071. Take profit. We end up being at 99.62 for my overall sale. The better. It will be a better trade if this happens, if the market pops up and tries to push back up to the resistance and then falls again, because that means that now it's truly a better sale to be able to get into. If it keeps on doing what it's doing right now, where the buyers are basically starting to really kind of find us that support, then I think it'll probably end up being a lower percentage trade. Type in a wire, yes, if that makes sense. But there you go. That's Euro United States dollar. I'm going to leave this up real quick for everyone. Risk reward factors 1 to 2.82. Gotta love anything. Gotta love anything above 1 to 2.3. All right, here we go. Let me take a look at gold real quick. Let's see. Do I have anything on gold? I got some on gold on this chart, but for some reason this chart won't work. Okay, let me go based off of memory. Gold has been in consolidation. Gold has been in consolidation for a while, from 1725, something like that. Uh, let's see. Uh, everybody give me a second. That's my boys are crying. Oh, give me a second. We're gonna go on mute real quick. Okay, so gold I have not been trading. And the reason why I have not been trading is because what I'm showing right here inside of this box. Currently, right now, the market has been in consolidation. I think the support was at 1685. The last time I ended up taking a look at it on Smart Trader, there was a buy trade that some people end up getting into when the market ended up hitting support. I said that because the market has already hit the bottom and already hit the support multiple times and has bounced up. Typically you would say that you want to buy at support and then get out at resistance. This is not one of those situations. When the market, this is just a rule of thumb. When the market is basically end up tapping the bottom more than 3 times, and then instead of sitting up there trying to buy it, or instead of trying to sell it all the way to the bottom or buy it all the way to the top, what your order should be is that you need to sell it to the middle, or you need to buy it back to the middle, because there's a better chance of the market going to the middle compared to going all the way back up to either a support or resistance. So in this case, to be honest, I would not take a move off of this trade. I would not do anything on this trade until the market fully ends up breaking either below the support or the resistance when it comes down to that price. Now, if we're looking at a order that could potentially end up happening, and for some reason, um, Forex.com doesn't, or yeah, Forex.com never has volume. Um, but if I'm looking at any order, my order would end up being below the actual support at 1671, and then after that, I would look at being able to going after the next support levels that may end up happening from there. So we're talking about right here, um, and right here when it comes down to movements. But my order would not be placed in until this market proves that it's outside of the consolidation. Once it's outside of the consolidation, now you have an order to be able to take. Until then, I'm not going to do anything with it because once again, it's a low percentage trade when it's inside of consolidation. Matter of fact, it's a 33% trade when it's inside of consolidation. So there's really no great area to be able to get in until that actually happens. So I don't know if y'all can hear my son. But that would be the order, or that would be the actual thing that I'll end up doing at this particular point in time. I would not do anything. I'll sit on my hands and just wait. Okay. Hopefully that makes sense. Hopefully that ends up answering the question because I know a couple people end up asking about gold. Let's take a look at pound United States dollar real quick.
Can I watch a tornado?
Come here and say hey. Oh, say hey.
Hey,
What's your name?
I was Witherspoon.
There we go. Good job. Say see you later.
See you later.
All right, go ahead.
Daddy, I want to watch a tornado.
Baby, you have your own tablet. Here we go. Pound United States dollar. 5. 5 going on 35. And my youngest is 3 going on 42. My youngest runs the house right now. Let's see. Man needs some old charts. Does a window show volume? Yes, it does. There we go. Cool. All right, so starting over on pound United States dollar. Now keep this in mind. If we know that Euro United States dollar is starting to consolidate a little bit, or it's basically showing a level that it's never been before, then what you're going to probably end up seeing, especially with pairs in that same area, you're probably going to end up seeing once again another low area of the market, basically going into an area where it's never been before. And we're getting close to that area as well. So once again, goes back to the law of diminishing returns. Is it worth being able to get into a trade like this where you're going to end up having where you don't know or have any type of technical information that can help you out towards the actual lows? So I'm not saying that this market is in consolidation. I'm just saying that the next support right now, if we look at based off this information, we end up being at 1.1660. Just for the sake of being able to say that. Now, from a weekly perspective, let's see if the FIBs will end up matching up with that and giving us a correlation on where the market can be able to go. So here to here, it's your first A to B to C to D. The extension end up getting hit right here. Here's your new A. There goes your new B right there. Nope, I want to get rid of this one. Thank you. We completed the extension off of that move, and here is your new FIB or your current FIB, which will be from right here all the way to right there. All right, so current FIB, as we're looking at it, which kind of matches up with what we end up seeing, kind of like what we end up seeing off of Euro United States dollar. Market's in an R3 position. Remember, R3 positions are one-sided trading. That's the reason why you see these big moves to the downside, because we know that one side has the advantage, and most people are going to trade to that advantage. Doesn't make any sense to be able to trade against the advantage when you already know what the direction is going to end up being, right? We don't want to make trading harder than what it actually is. So there's a D extension at 1.1453. There's a support at 1.165, 1.1650. My first take profit position will end up being at the support at 1.16550. Currently, you got about from a pip perspective, if we just look at it from right here, we got 158 pips that are left in this move, and you got about 350 pips off of this move. Now, from a weekly perspective, there's a true counter trend line break, which means that I would be way more interested in selling this compared to the Euro United States dollar. We take a look at it from a daily perspective. I guarantee it's in the buy zone though. Yep, there it is. So when we take a look at this, we are okay. There goes your counter trend line break. There goes your breakout. There goes your retest right here off of this candle. There goes your movement to the downside. So you cannot use it based off of a daily anymore. You probably have to go based off of a 2 hour, 1 hour, 15 minute, based off of how you're looking at it. If I go based off of a 2 hour to 2 hours in the buy zone, so I do expect that or 2 hours actually in the sell zone. So we may end up seeing that the market may end up falling. We go based off of the 1 hour. 1 hour is basically in the sell zone again. So that gives us a better chance of being able to take a look and see if there's a vortex trade that we can be able to take. And it's funny when you look at charts all the time, you'll see so many of the same patterns, especially when they have the same correlations. So remember when we ended up talking about Euro United States dollar and I had this large consolidation block that was like this? It's the same thing that you end up seeing from that previous one. You had that large consolidation block because we end up having this large consolidation area right here. And since then, we end up having a free run area. Here's your medium. Here goes your medium node. Here goes another medium node. Here is the free space from right here to right here that was capitalized on. There goes your consolidation. Remember, once you have the consolidation, you don't trade on a high volume node, or in this case, a medium node. You wait until the market actually ends up breaking out of that area. From there was another sell zone right here. And currently, right now, we're back inside of another consolidation block. So the answer, Courage, to your second question will end up being, what would I do off of this one? I won't do anything until the market ends up breaking outside of this high volume node or this medium volume node. I will look at being able to place in two orders. The order to the downside will end up being below 1.1782. The order to the upside will end up being at 1.1848. I would go with a lesser percentage on the buy trade. I would go with a higher percentage on the sell trade just because we have a better chance of being able to do it. On the buy trade, I would go after that position. On the sell trade, I would go after the lows of wherever it is on that position. Once again, you're gonna run out of data to be able to work off with. So that order or that take profit will be at support at 1.1642 for the actual position of being able to get out. So order will be at 1.1780. Stop loss will be above point of control, 1.1882. Take profit will end up being all the way down here, 1.64, 1.640, 1.60, 1.1640. There we go. Take profit. Risk reward factor will be 1.3. Or 1 to 3.5. I like that risk reward factor to the downside. If it falls to the downside, I'll look at being able to take that order. Now, if you decide to be able to take the buy, remember the buy will be more of a scout because the market is already in a short position. I would either not take it at all, or I would be very low on the percentage of what I would end up getting into. That stop loss will be below the point of control as well. Buy trade will be above the overall, will be above the highs at 1.1846. Take profit will end up being right before this middle of this consolidation area will end up being, which would be at 1.1910. So you can say 1.19 to be able to get out of that position. But that would be the two orders that I will look at being able to place in if I'm going to do anything based off of that move. But remember, don't trade inside of a medium volume node, a high volume node. You're not going to make any money off of that area. It goes back into what I end up saying. It's a 33% trade when it comes down to that position. There's no reason of being able to trade inside of that area. You're not going to do anything off of that. You want to be able to take advantage of these low volume nodes. You take advantage of the low volume nodes, you will sleep better when it comes down to your trades, guaranteed. Typing a wire, yes, that makes sense for everybody that was taking a look at this trade. If you're interested in being able to take it, I'm going to leave this up for a second. So you can be able to make a decision off of what you want to be able to do. Okay, there's no questions on that. Good. I'm going to go ahead and go into DAX. So the rest of these trades that I'm going to end up talking about are trades that are already closed out. And trades that we end up taking on Friday. For the people that end up taking them on Friday, quite frankly, you wake up, then you should see that you're in profit and you're about to close out. And congratulations for being able to do that. We've been talking about these trades for about a week and a half at this particular point. Um, Hey man, you're welcome. Just do me a favor. Click on that boost button. Click on that boost button for me. If this is your first time being able to see what we do, make sure that you end up tapping into my page so you can be able to see exactly what we do on an everyday basis. Uh, but excited to help. Lord, love to help. So German 40, I'm just going to go off the hour because it's pretty simple. We already done took the trade. One large consolidation panel. We end up taking this first order when it end up breaking out of this consolidation block on Friday. When it ended up breaking to the downside, we ended up taking a sale. We ended up saying that there was two positions that we wanted to be able to get out at 13 for 15, and then after that 13 to 24. The trade on 13 for 15 closed out on Sunday right when the market opened based off of a gap. Later on that day, actually in the next few minutes, the market may end up closing out on this position at 227. So remember, I said that if it was going to drop, it was going to drop fast, and it was going to end up giving us a position to be able to get out. And the reason why it was going to happen was because we were going back inside of this block of consolidation that we end up having from July 19th all the way up to July 29th. So we're getting out before everybody else does and just going ahead and canceling and then being able to make our money before everybody else tries to go from there. So there's no reason to sit up there and stay in this trade anymore. If you was already in, quite frankly, you might as well go ahead and get out now. Congratulations on that move. That was a big time move when it came down to how much we end up making in a little bit of time. That's literally a day where we end up making almost 298 points based off of that movement. If you do that based off of one mini lot on all of them, that's $2,900 between both of those movements. So once again, congratulations for everybody that ended up making that move when it came down to that position. Uh, Now, our biggest move that we ended up having over the weekend was US 30. Um, and once again, for social proof, let me go ahead and do this and get this out the way. Wrong screen. Um, for social proof, we're going ahead and just show it right here. These were the orders that we ended up taking based off of that and based off of those movements. 900, 2400, 4600, 35. All right, $3.53. So once again, congratulations to everybody who ended up making that movement. Good job, good job, good job, good job, good job, everybody. Here we go. Let's go ahead and take a look at what happened with US 30. US 30, same situation. Large blocking consolidation started pushing to the downside. We had a better chance of being able to make a move off of this one. I'm just going to go based off of the hour because, once again, the move is already over with. So there's no reason to sit up there and try to add more onto it. The move is already over with. It might be another move here shortly. We have this sale. We have this sale at 33,293 that we end up talking about. We'll talk about that one as well. Um, but on Friday, large consolidation block. I said, want to look at being able to place in the order at 33,702. What's going on, Juan? Hope everything's going well with you. Taking a look at the order at 33,698. End up getting placed into this order and got stopped out on the first one. That ended up happening on Friday. So you end up taking the first trade and you end up getting stopped out on that first initial move. Like I always say, because it is a consolidation block, you automatically just got to re-enter the move. And sometimes you got to sit up there and take a loss to be able to take a win because you know that the risk reward factor is going to be a little bit higher. So, or better yet, I know what happened. The first order ended up hitting take profit at 33,640. Then after that, it popped back up. When it popped back up, I got out of the second trade to be able to get profit, and then I got back in right before it came back, right before it went into that order. On Sunday, when the market opened, the market gapped down right here, and then after that, placed me into that second trade, and then went down to my position at 33,500, which was a take profit zone of that overall move. So that's how that one ended up getting completed. Um, Now at this particular point, the only thing that we're looking at when it comes down to this move is we see that the market is in our freeway run right here. The market hasn't consolidated yet, so we're still in this freeway, we're still in this vortex area, freeway area, um, and I'm waiting for the market to actually start to consolidate. I'm not interested in being able to get into it until it actually starts to consolidate because I need to build up some type of momentum or build up an area to where I can be able to place in my orders. Currently, right now, what I can see is that from a 15-minute perspective, here is our medium volume node. I'm not going to consider that to be a high volume node. We can see that the market has broke or has a consolidation block right there. My order would still be to the downside. It would not be to the upside. But if you want to scalp it, then you can. Kind of like what happened with Europe. Kind of like what's happening with pound United States dollar. If you're going to scalp it to the upside, if it does break to the upside, that order will end up being up to 33,559. If you look at being able to sell it at this particular point, let's see. Why did I? Oh, okay. So I had this one below support. When did I make this supporter? Okay. So what I would do is this. Okay, I'm gonna move up my pending order. I'm gonna move up my stop loss as well. Or maybe I should just make this an individual trade. I'm gonna keep that where that was. I'll just make another individual trade. Okay, so if I'm going to place on a pending order will end up being at 33,360. 33,360 will end up being that order. You want to be a little bit more safe, you can say 33,355 to have it prove that it's going to break to the downside. Stop loss will be above the point of control, or you can be able to place it above the overall high, 34,450. Because we're doing the order at 33,355. What would that make it? Make it less than 100 points. Okay, I can deal with 100 points. I can deal with 100 points. Um, hasn't It's only done bounce once. Okay, I'm gonna keep it at the point of control. I'd rather keep it at the point of control at this particular point because we don't know if it's gonna end up popping up or not. So stop loss will end up being at 33,430. Take profit when it comes down to this position. You take a look at this low volume node. We have this huge gap to the downside that's right here. That would be the position that I would go for. And quite frankly, if I'm going to do that, then my stop loss, I'm going to place it above the consolidation. We got a better risk reward when it comes down to that. If I'm going to get it, I might as well stay in it when it comes down to that move. All right, so short position, 33,355. Stop loss at 33,450, or 33,450. Take profit. $32,870. 32,880. 32,880. Risking 100 points or 103 points um, to go after 475 points. Now, there's two orders that can be made based off of this, and they're kind of shown based off of what I had previously. We have a pending order that was previously at.
Daddy, can I watch a tornado?
Yes, son. Here you go. Put it on your charger. Put it on your charger. Where are we at? You
Let
sure?
me watch a tornado.
Go ahead. See, I got 33. I got orders at 33,275. Where did I get 275 from? Oh, okay, that's the low of that position. So we still had an order from 33,275 with a stop loss of 33,390 with a take profit of 32,930. 930 will be take profit one. Take profit two will end up being at 880. So I'm gonna go ahead and place this order in. And that would be my second order when it comes down to this position. Now, keep in mind, 930 has not hit yet. So you may end up seeing that this market may end up trying to pop inside of this move and then pop right back up to the upside. That's why I'm placing my orders so far outside of this overall area, because it truly hasn't. If we're looking at this consolidation, I'm going to say it truly hasn't made like a real natural support yet. I would say that would be your natural support, but I'm pretty sure that the market's going to bounce. So if I know that this wick low is going to end up being the position where it bounces up at 930, that tells me that that would be the better order to be able to take. Once again, I would rather for this order to pop up and then after that get rejected at 33,445 first before getting placed inside of this order and trying to see this market hopefully fall down. It's been falling down for the last 4 days, and I'm pretty sure that the D extension has been hit. What's going on, Peter? I hope everything's going well with you. A D extension has been hit already, so I'm expecting that the market should pop up first before actually going down. So don't get suckered into this trade. Don't get suckered into this trade. If it goes down and then it comes right back up, get out of it, and then after that, re-enter the trade and be ready for it the next time. Okay. Type in a Y or yes if that makes sense for everyone. I'm gonna stop on this one. I actually have to go. To work, but I'm gonna actually stop on this one.
Daddy,
And
can you help me?
what's up, baby?
Can you help me?
Leave that alone. Leave that alone. Try that out. Can you hear now? Wake up. Miles is using my phone. Hey, y'all go in the living room. Go in the living room. Go.
Mom, the guy wants to do everything. Come on.
Let's see. Let's see. Check on pound yen. I think I still had that order up, so yeah, I'll take a look at it real quick. Let's see, U.S. oil. Nope. Pound yen hit ID extension at 1.165.75. Currently, right now, it's in consolidation. It's starting to make its moves. From there, it's moving to the downside. Because it is moving to the downside, there's no fractal to be able to work off with as of yet, at least from what I'm looking at on this one. I probably need to pull it up on a different chart. Give me 1 second. Hold on, did we talk about pound yen the last time we ended up doing this? I'm almost certain that we ended up talking about pound yen one time before. Use a window. Yeah. Okay. That means consolidate. That means consolidation. Did I show this as consolidation? What is this? It's a large consolidation block. Why do I have that? Oh, consolidation. Go figure. Okay, so we're still in this high volume node. There's really nothing to do. Uh, to be honest, Pete, I wouldn't do anything with it. I wouldn't do anything at all. I would wait until the market actually ends up breaking below 160. Once it breaks below 160, I look at being able to sell it down to 157 on that first one. If it does go up, um, if it does go up, then after that, you got a bigger order that you can be able to take a trade on from 168 all the way up to 181. But until then, there's really no move to be able to take off of this move. I wouldn't even want to. I wouldn't even want to try to even kind of pull one up because, quite frankly, it'd probably be a losing trade. So I wouldn't take any trade until below 160, based off of that movement. Um, but kind of going based off of what we end up talking about for the last couple of days. I want to talk about the trade that we ended up doing on Friday. I already talked about the trade, but I'm just gonna show you the results of that. This one has been basically a wild one when it came down to movement. Um, this is US 30. Let's see. US 30 started off the day well. We talked about that when it was up 4,500. Ended up taking that, took a couple losses trying to chase it, took another loss trying to chase it. That order that I placed in at 33,705, the one that I ended up saying, hey, I ended up getting kicked out of. That was the one I ended up getting kicked out of. That was in the middle of the day. So basically wiped out all of that wins that we ended up having from there. It placed in again. I placed that same trade again, but I had to go a little bit lower, 33,673 and 33,555. Once it ended up breaking those lows, I was able to get back on it. But other than that, ended up having a good morning, or obviously ended up having a good weekend. And you take a look at those trades. But overall, we got to order. Taking a look at US 30 again. Hopefully, I want to see it bounce. I don't want to see it kind of fall right here because I think that there'll be a false break. I think it'll be like a quick flash drop and then kind of move from there. I would rather it pop up first before falling down. But if it does fall down, then I'm going to go with a 1% entry. If it falls down after hitting this one, I'm probably going to go with a 5 or 7% entry, depending on what it is. If it falls down this time early, it's a 1% trade. If it goes up and then rejects off of 33,446, then I'm going to go with a higher percentage because it proves that the sellers are still more in control. All right. Thank everyone. Thank you for being able to pop in. Truly. What's happening with my website? Everybody, thanks for being able to pop in. Click on that boost button. I would give you a link to be able to take a look at my invite link, but for some reason my WordPress is not working as well, so I got to figure out what's going on with that. But I send that over to everybody else when it comes down to that. Like always, plan your trade your plan. Everyone, y'all have a good one. Hopefully, y'all have a good trading day. Take it easy. Bye.